Folks, Dan Frio here, the rate update. Today is February 22nd, 2021. Not a bad day. I expected a lot worse, so don't go away. We're going to talk about what happened in the market once now that Russia did invade Ukraine. What's going on? Did the world end? So finally, and I'm not saying that disrespectfully, but Russia went into Ukraine. I thought, the whole world thought, I assumed that, the markets would really react in a big way. Well, they kind of did, but today it's not really off as much as I anticipated. So this might be another area where it's like people were trading on the rumor, and then basically by time it happens, it's already built in. Okay, so I'm going to go over those numbers next, but let's get into those. This is good news for homeowners, not good news for those still out there waiting for a dip in something. And I'm still kind of wondering what you're waiting for, because you wait for lower rates, that ain't happening. And if you're waiting for lower prices, I don't see that happening, nor does a lot of people that we follow. So let's get into the headlines. Home sales expected to hit a 16-year high in when? 2022. Real estate pro Ivy Zellman, she's fantastic. So if you'd never heard of her, or you don't follow her, I would highly suggest you watch her. Her and I are synced in a lot of areas we're thinking about. So I'll leave it at that. Watch the full interview. Low inventories and higher prices lead to lower home buying traffic and steep competition. Rates have been ticking up, but it hasn't affected home demand yet. Okay, so basically everything here so far is telling you there's nothing in the near future that should really ease housing prices. Okay, so that's that for the news for the day. So let's see what the Ukraine-Russian situation is doing for mortgage rates. I don't know how this is it, because the MBSs are down, but we're going to go with it. I'm going to focus in on this cell right here, guys. This is mortgage rates published by Mortgage News Daily that surveys lenders all over the country, and here's their findings. Let's zoom in on the 30-year rate now so I can explain this to you. The 30-year fix is coming in at 4.08. It is down 0.01. We reference that as 1 basis point, okay, right here. Then you're going to see down through here, I'm not going to mess with it or highlight it because I screw that up all the time. It's coming with 0.4 in points. You can see that right here. So how do you figure that out? Well, just take your loan amount and then multiply it by 0.4 and then hit the percent sign. Okay, that's what it would cost you to get this rate based on this sheet right here. Okay, the 52-week high and low is 278,412. We're off of the 52-week high by 5 basis points. All right, so that's that. Let's zoom out. And let's go across the board. We got the 13-year fix coming in at 3.33, down 1 basis points, also coming in with 0.4 in points, 52-week high and lows right here. 30-year FHA/VA, 368, down 2 basis points. Got the 30-year jumbo coming in at 359, up 2 basis points, and the 5/1 ARM coming in at 372, up 3 basis points. All right. The trend for today is basically kind of teetering on negative, but nothing major right in that area here. So let's go on to what's the MBS is doing. I'm going to refresh this and then I'll show you the live. I think things are starting to adjust right now, and I'm going to show you why. But it's saying right now the MBSs are down 11. Okay, we had the trend going down and down and down. What does this mean? Okay, let me explain this chart to you for newbies out there. What happens is mortgage rates are tied to the MBS market. What the MBSs are, it's a mortgage, or it's a bond that trades on Wall Street. You might even have it in your portfolio. That is the biggest determinant of mortgage rates. It's not the treasuries, it's not the federal funds rate, it's not anything of that. It's that number there. Okay, so with this number that's getting represented, it's what's happening to the price of a mortgage-backed security. And let me explain how it works. As the price in this case is going down, prices go down, that means mortgage rates are going up. Let me explain how this works in bonds. Okay, bonds 101. So if you're new to this, you can skip ahead. I got it down in the timelines down below. But if you're not, let me explain it to you. Here's how bonds work. Let's say, for example, I want to buy a bond from you, and next year that bond, when it comes to maturity, you're going to give me back $100. Okay. So today I give you $100. Okay. High price. And then next year you give me $100 back. What was my return? What was my yield? 0. Because I gave you 100 and you gave me 100 back. Okay. That's a high price. Now let's drop the price. Let's see what happens to the yield when we drop the price. It's supposed to go up. Let's make sure it works. So now today I give you $50 and next year you give me $100 back. What's my return? What's my yield? 100%. So do you see the yield when I paid you 100 at a high price is 0. As we lowered the price of what we paid for the bond, it increased our yield. In this case, it went all the way up to 100. So that's how this all works. So I hope that explains it to you. Okay, so we really like when this number is going up and not down. So this is moving, and there's a delay here, but let me show you mine. And again, I apologize. You might be able to see this up here. You can see it because it's in red. We are down 25. This is the live screen that I personally use. I don't use this because there's a lag, and I need real time. Why do I need real time? Well, basically think of this. This is what's going on. I know that if this thing automatically just plummeted, so we just went from -8 or something like that. Now we're almost down 30. We're down 25. You're seeing this as we're watching this. It's telling me it's crashing. Okay, it's pushing up rates, pushing up rates, pushing up rates. So when I see this completely dive off a cliff, the banks see it as well, but they can't react. They react as fast as they can, but not as fast as I can, because it's going to take them probably a half hour to adjust their rate sheets and everything. That gives me a half hour to go in and lock you in, because I know based on all my information, rates are going up. And in some cases, they go up substantially. So this is kind of a little crystal ball that I know what's going to happen maybe half hour to an hour from now. Okay, so that's why I have the live version and I don't use this version, because it's delayed. Okay, so I'm just teaching you a lot of the tricks of the trade today. So what I want to go is, if you don't know, on my website, therateupdate.com, we have a ton of new features, and this is the feature of the week. We have a new system here, right here. This is called HomeBot. Let me explain how this works for you. This is for you guys, the homeowners out there. If you own a house and you want to know what value is my house, what's it coming in at, plug in your information here. Okay, let me explain how this works. And we had, I think, about 50 people subscribe yesterday, if not more. It's going to say here, your house is worth X. But if you want to unlock all the features, just plug in your email address. Now, what I can tell you is we do not sell this data. There is no cost to you. This system does cost money. I pay for it. Okay, what we're here to do is help you and educate you. So what it's going to do, it's going to unlock a whole bunch of features. One, it's going to tell you any liens on your house and when they were filed. Okay, it's going to say, hey, if you want to refinance, here's some refinance opportunities that might be available. If you were to rent it, how much could you get in rent? How hot is your market? Do you want maybe a realtor to come by and actually give you a value of your house? For sure. Okay, a ton of features. We are not going to bombard you with cold calls. We might not ever even call you, but you'll get some emails and things like that. And we're here if and when you need the assistance based on this information that it's giving you. A couple other features that we just added were over here. If you're a realtor out there and you want to get into our referral program, go to inquiry forms, and let me get my head out of the way. There's one for realtors. And if you're a mortgage broker out there and you're like, hey, I'm kicking the can. I want to make a move because, I don't know what that because is, but check it out. I'd love to give you a call and at least pick your brain about what you're looking to do. Maybe you'd be a good fit for the Frio team. Maybe you'd be a good fit for Nexa. Maybe you wouldn't be a good fit at all. I don't know. And that's what the conversation would be. But another piece here is the mortgage calculator. I'm going to go over that today to show a lot of people that went to buy a house or build a house last year. Can you still qualify today? So that might be a big dilemma for a lot of people. So that being said, thanks for watching the report today, this morning. Please don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. How do you reach out to us for our assistance? Well, over here, give us a call. 844-775-5626, or schedule a meeting with us by clicking that button, or click the apply today button. It's going to take you about 10 minutes to complete the application. You're doing the full application, so make sure you spell your name right, put in the right numbers and so forth. But based on the answers to the questions that you put in, it's going to say, hey, we need this information from you, such as maybe a pay stub, maybe a W-2, maybe your tax returns, an ID, so forth. Then you drag and drop your information into that bucket. It's completely secured. It alerts me that you have information there. We'll get right on it and make sure we review everything you have, and then also reach out to you to answer any and all questions. So thanks for watching, guys. I'll be back later today to say, do you still qualify for that house you're building? Maybe, maybe not, unfortunately. So I'll see you later. Bye-bye.